Our next presenter, I'm pleased to introduce Patrick Lemelin. Patrick is Vice President of Agriculture at National Bank, and he's going to be presenting Canada's Ag Economic Outlook to us today. And we're very excited to have him here with us. It's the first time National Bank has presented with us. So no pressure, but I'm expecting big things, Patrick. Over to you. Thanks so much.
All right, thanks, Heather. So just going to be sharing my screen in a moment. So I guess we're on.
Perfect.
Perfect. Okay, well, thanks, Heather, and hello, everyone. So it's great to be here with you. As Heather was mentioning, so I'm working in National Bank. So I'm the head of agriculture and agribusiness at National Bank for the Canadian market. And just to give you some background about me, so I got a degree in agriculture and economy and a master in business, and I've been around in the banking industry for now 25 years. So we will be talking about economy today, impacts the pandemic on the economy, quite special situation, what we have in front of us, and for sure we'll talk about where agriculture stands in this environment. So we'll try to do an economic outlook as much interesting as it can be. So this is a crazy recession in terms of the dynamics that are in play. Very unusual situation, and we'll look into that. The good news is over the past few weeks, we had hope that we will normalize in a not so distant future. But let's start by the obvious. If we look at recession in terms of GDP, there's no hiding about the fact that this is the worst recession in modern history. Let me give you some guideline on historical perspective on what recessions are usually looks like. Hold on, I'm gonna okay here. So usually we're in a range of 3 to 5% on GDP drop in more what we can call more classic recession, what were due to a shock in the demand or a financial crisis with a span around 10 or 18 months. This one was very special because, as you know, it was a health-related recession. So previously to the pandemic, economy as in general was in good shape. So when government shut down the economy, to control the spread of the virus, it gave us a huge drop in GDP. So we were at 18%, in April, so which was there's no precedent in modern history. So the only one precedent we got with respect to health crisis, it was actually 100 years ago with the Spanish flu. So and where the GDP went down by 7%. So one of the takeaway of that slide is that these health, even if we don't have so much experience with respect to this situation, but these health crises, are giving a bigger drop in the GDP standpoint. So the good news is that we were at 18%, so we're at the peak, so we're not there anymore. So we caught up a big chunk on the GDP decline. So we're roughly at the same level that where we were on the last recession or downturn in 2008. And we're roughly the same numbers, in USA and Canada. So we can look at this recession in terms of the GDP, but we might not want to look at too much on the GDP. I might prefer to look on the employment rate. So why I'm saying this is this crisis led to the very first real service recession, over the past 75, 80 years, strictly the service industry is not declining that much on recession, but this time it did, and big time. We went down by 22%, on GDP and these in this sector. And this is important because service sector is way more intensive in terms of employment. So the government, when the government ordered us to shut down the economy, so this impacted more retail sector, entertainment sector, and sectors such as that. So so if we look the crisis on the employment standpoint, you'll notice that the employment is recovering much faster in Canada than USA. USA are still around -6%, and we're in the range of 3 point some percent. So we did catch up a lot. So what does that mean? It's in USA, policymakers will be way more focusing on stimulus on the employment rate rather than stimulus on GDP. So it will be the same in Canada as well. So you can see a lot of the program are massively supporting, the employment. Um, the spread of the recovery is quite good all across Canada. So actually, every Canadian province are doing better than USA. So the question is why this is happening. So a part of the explanation is that the fiscal measure being introduced by Canadian government were more generous to a certain extent, and also better targeted on the labor market. So let me explain this. So we got a peak of close to 4 million Canadians that were taking advantage in May, June of the emergency wage subsidy, and this is important because you're keeping that way, the involvement on the labor market and getting people, active, on that standpoint. So again, so the programs were more targeted than USA, and today, we're around 2 million of Canadians that they're taking advantage of these programs. But there is a cost to that. So this is the biggest fiscal stimulus in modern history. So we got the biggest drop in GDP in history. So we got the biggest stimulus as well. So if you want an historical perspective here, over close to 150 years, so you can see here we are. If we present the debt in percentage of the GDP of the country, so developed economy are around 125%. So they're all countries are spending big money in order to support their economy, and we'll see that later on. But this is a part of the explanation why some of the sectors are bouncing back as quickly as what we can see. Actually, it's higher than the level the second war level. So I'm drawing your attention here on the red dotted line here. So this is emerging economy. So we can see a ramp up as well, in these economy. And typically speaking, in the past, they've been more quiet on that aspect. So why this is important is because, a few years ago, we got an important switch, in the world environment where the emerging economies, switch over 50% of the on a global weight, on a world span. So today, they are representing 60% of the global GDP, the world GDP. So good news to see them, these emerging country, investing and supporting their economy. So what does that mean? It's we will have a more world resilient economy on that way. The average among the developed countries around 5%. So as you can see, we're in the right hand of the chart here, with close to 16% of our GDP in financial stimulus, to support the economy in that crisis. So Canada has been very generous, and we keep staying generous. So again, what this looks like with respect to in terms of deficits, going back to the beginning of the Confederation, we never saw a deficit of this magnitude outside of a global armed conflict. So again, very large effort by the federal government. So when we see that, we can say that well, we might be concerned about that, the level of the deficit, when we share some information like this. So the big question is Canada in the trouble with that level of debt? So let me bring some light into that. So the starting point, first element is the starting point, was way lower than most of the countries. So before the crisis, we were just below 30% of our the level of debt, in percentage of the GDP of the country. And you see, so we can observe the same trend here, but we were expecting to be in the range of 60%, at the end of the crisis, but still we will be 2 times lower than G7. So we're still in good shape. So obviously, money has to go somewhere, so it's going to the balance sheet of the country. So we got a larger debt, but we are in a way better good shape than the other country, and we're gonna still below where the average was before the crisis. So that should not put pressure on the Canadian dollar. Actually, that should help the Canadian dollar. So I'll talk about the Canadian dollar later on. I know it's important in agriculture, especially when we're talking about commodities. Extraordinary support to household income, as I was saying, we can argue that Canada should now deploy more targeted measures. So let me explain that. So at the beginning of the crisis here, we got a big decline in labor compensation here, element number one. So actually, it's the over the last 75, 80 years. So it was a peak, with respect to the magnitude of the decline. So government, step up rapidly, with transfer that more than upset, the decrease, in the global compensation, and that led to the biggest increase in disposable income in Canadian history. So can you believe this? So the worst recession in terms of employment, with the biggest increase in disposable income. So government was so generous on that side that the households were not able to spend all the money. So we saw an increase in saving here, so actually we're in a peak here again. So over the last 75, 80 years, on the level of saving in the Canadian market. And as bankers, so I can tell we see that, all across the financial institution, reduction of credit line, increase of the savings. So it's quite unusual. A quick word on the retail side. So we saw a big drop. Was obviously we shut down a lot of stores, during the crisis. So it was a big decline all across Canada, in the retail side. But what's interesting, it's we cut back everything, and we are even higher that where we were at the beginning of the crisis. So people got money. Support was from the government was very effective. So if you look that on the USA base, so it's the fastest recovery on goods consumption. So over the last eight recession, it is the fastest ones. It's not only a recovery, so we're up by 8% in US. So people are not traveling, people are spending, but are spending on a different ways. So this is a bit unusual in a crisis, in a recession like we have. So we heard that what the crisis would bring a big change with respect to globalization, a big trend on the buying local and food autonomy and supply autonomy. But I got some news for you. So after 8 months, we're back on the world level, at the same level on the world trade volume. Just to give you some perspective, in the last crisis, took almost 2 years and a half, to get there. So. And why that? We got a lot of trade agreements, and the economy is structured that way. So, in order be a bit more, a bit less global. I would say will take a lot of effort, on the government standpoint and on the industry, and it will take years. So we'll see down the road if we can get there. So a couple of words on the commodity prices. So we're back at the level pre-crisis here. So obviously it went down a lot. The oil was a big driver into that. So provide some good opportunities during these low levels. We were able to fill up the tank, at a very cheap price this year. So it will reflect on the financial statement. The cost of energy was lower, so we're getting back to normal. But on the 2020 year standpoint, we'll save money into that. So biggest monetary stimulus in modern history, talked about that. So let's look a bit more into that. So during the last crisis, the Fed and the Bank of Canada, have been kind of active on the market to support the bond market, corporate and government bond market. Federal Reserve was way more active than the Bank of Canada. So, but we saw on the last crisis unprecedented support. So both Federal and Bank of Canada and across the world, I should say, they've been very, very active, on supporting the market. So that led us to an incredible recovery in the stock market. So look at that, the last two crises, respectively 6 and 7 years, and only took 6 months. Sorry, I'm gonna grab some water. So only took 6 months to get back at the same level, and we're even in a record. So this is thanks to the support that both Fed and Canada government, Bank of Canada did, on the bond market. So again, so we got some kind of wartime support. So again, so this is debt to GDP ratio on the right, the blue line. So I'm bringing in that, I'm bringing your attention on the red dotted line here. So this is the interest rate. So we all know the interest rate where we are at the moment, but if we look at the real interest rate, so which is interest rate minus the inflation, so we're just entering into an environment where we are in negative interest rates. So and last time we were there, it was in 1950. So it's been a long time ago. So we don't believe that Bank of Canada and the Fed are going to go into nominal negative nominal rate range. We don't have that as a scenario, but we believe that these rates gonna stay very low at least for 2021, and we're gonna stay in a very low environment in 2022. So why? Two reasons. First, economy. Even if we see economy catching up, the longer that crisis is gonna stand, the bigger the impact on the structure of the economy gonna be. So we will need a strong stimulus, for the businesses, and this is why we believe that the interest rate gonna stay low. The other point why I'm bringing back here the level of debt here, it's because this is another element in the equation, I would say, because the level of debt went up a lot. In Canada, it actually doubled up. Today, the charge and interest, it's the same because interest rate cut by 50%. But there's going to be another element, so it's going to be pressure not to raise too quickly interest rate with respect to debt. But the biggest one going to be to continue to stimulate the economy. A couple of words on the U.S. dollar. So we were wondering a couple of years before the crisis that maybe the U.S. Dollar was losing some ground as the world currency. Some country, we saw that in the last 2 years, some country even issued some bond in euros instead of in US dollar. But we clearly saw during the crisis that people ran run out after US dollar in order to to secure some of their investments. So this is why it pushed up a lot the US dollar. So the graph here is US dollar in comparison with a basket of 26 currency all across the world. So now we see, the crisis, economy is it's catching up, stock market's catching up. So we're more in the range where we were before the crisis, and we believe we're going to stay in that range. So that brings us to where we see the Canadian dollar, and this is important. Agriculture, we got a lot of commodities that they are price driven by the US dollar in the Canadian market. So we saw the dollar with respect to the Canadian dollar with respect to the US dollar, move down during the crisis. So it helped out a bit on the price, of this commodity here in the market. And then, it's following the trend, we saw in the precedent graph. So again, where we see the Canadian dollar in the next year, we see the Canadian dollar here around the 80 to 81 cent. How come that? Economy is going well. The recovery is going well, I should say. Canadian government is one of the country investing more in stimulus. We got the best balance sheet as well. So all these factors will help the to keep that trend, on the loan. So kind of a bad news, for the commodity, the ag commodity side. Okay, so what are the impact of this pandemic on the agriculture themselves? So usually recession is good. Recessions are good for agriculture. Why I'm saying that? Demand are quite stable. In agriculture, people need to eat, and agriculture benefits from the stimulus that government put in place to support the economy. So here's a chart here with some of the numbers per industry on GDP. So recall, we were at 18% drop in GDP in April. Agriculture was at plus 0.4, while I just highlighted other sectors here, like entertainment and food services, it was a huge drop. At where we were in August, well, we were at minus 4.6, and the Canadian GDP, and agriculture was at 2.5. So there's not so much impact, in agriculture. So I can say it's a low impact from my perspective. It's a low impact in agriculture, and bear with me. So this is a very high level analysis. So there's some specific production in some region that they had a big kind of moderate impact, but all in all, we can say it's a low impact. If you look to the dairy, prices and demand would be quite similar to the previous year, on a very holistic standpoint. Grain, Mother Nature was good. So we got some interesting yields, some interesting price as well. So low impact in agriculture and the agriculture environment, I would say agri-food, we got a bigger impact, not to the level we saw in other sectors, but packing industry, food processing, and we are expecting, they will still deal with that, stability of the workforce, when people get COVID. So as soon as vaccines are going to move on, it will reduce a bit the pressure. So as bankers view what we are expecting, so while I'm expecting to when 2020 financial statement gonna get in, to have financial results in agriculture in most of the production, in the average or just a bit over. Why? Demand were stable, and we got the benefit from the stimulus. So low interest rate is a very important one with the level of debt and farming in Canada. So farmers are renewing their loans, so they're taking advantage of that. So we got a very good period on the this summer on the energy price aspect, and farmers were eligible as well to some of the program, such as the 40 grand emergency fund. So all that together, so I'm expecting in the average or just a bit over average. So a correct year for agriculture. So what next? Well, biggest recession ever, biggest GDP drop ever, and employment drop ever, stimulus on a record level, stock market at peak, a consumer with a lot of cash ready to fire up when the social distancing going to be over. So honestly, there's no blueprint for that. So, but let's look at a couple of things. So a new normal. A lot of people were talking about new normal, so I do not believe that. So we'll see that in a couple of slides. A survey on what people are expecting to do after the social distancing is done. But for sure, it might the pandemic will we believe that will boost some trend like the we lost on the chart. The grocery delivery. So obviously for numerous reasons, but it was a trend. It was there. Worldwide before the crisis. So thing like that, we believe that pandemic will push up that trend, and you see other trend, in consumption, obviously with the shutdown of some industry, takeout went up, etc. So, but and you see here a deep dive look on the grocery sales versus restaurant sales. So obviously, we saw opposite trend during the crisis. There's still a gap. So and we saw some movement as well. So lower consumption on animal protein, high consumption on bread, rice, and pasta. People are eating differently when they're eating mostly from home than restaurant. Lower consumption on butter and cream. But this is not permanent, obviously. So here's some survey, what people are gonna do or would like to do first, when social distancing restriction gonna be lifted. So first, no surprise about that. So hanging out with friends and family. But the second one is going back to restaurant and etc. So on the food side, people gonna get back to close to a normal with respect to restaurant and obviously everybody knows that. So we're in the middle of a second wave. Just drawing your attention here on the green line. So a lot of people were talking about the Sweden model, during the first wave, about how they were managing the crisis and etc. So well, today they are competing with USA with highest numbers with respect to the number of cases per million. So we don't know where this second wave is gonna land. So this is we hear some talk about shutting down a bit more the economy, and so it's very difficult to predict, where we gonna land and what's the next year gonna looks like. A quick view on the vaccines order by country. So as for the stimulus, Canada has been very active. So we did order actually 9.5 doses per person, in Canada. So it's very high, way over the average. So we might have some good surprise as soon as vaccine gonna be available. So you see, so there's movement. So consumers is consuming a bit in a different way. So it's not true that all the globalization gonna get going to disappear. So there's some heavy trend that they were there before. They're gonna keep going. So consumer got a lot of cash ready to fire up. So the big thing is around how fast we will be able to provide some vaccines to the population. So that might speed up a bit our scenario or delay a bit, if we're struggling with that. So there's no blueprint, special crisis like that. So if I can risk ourselves to predict sorry, some stuff, on the GDP growth, we see in the range of 4 to 5 for 2021. So would be one of the biggest growth, in the last couple of decades. Uh, so our scenario is we should be close to the pre-pandemic level at the end of of the 2021. And the other thing we can share what we got in our banker's crystal ball. Was talking about that. So the Canadian dollar around 81 cent for next at the end of the next year. The oil barrel around $50, and we see interest rate very stable. Over the last year. Maybe in 2022 as well. So. The rate for the Bank of Canada. So we might see quick note on that. So I know that you guys are interested by the movement in interest rates. We were expecting to see Bank of Canada and the Fed rate quite stable. If we're getting back to normal, we will see in the bond market, some ramp up. So we might see. So today the yield curve and interest rate is quite flat, between short-term and long-term rates. So we might see some ramp up, somewhere by the end of the year, on longer terms. So it's about it for. I'll take some questions here. I think we got 2 or 3 minutes left, so I'll jump back to where's
Yeah,
my.
if you'd like, Patrick, I can help moderate the questions.
Yeah, so I'm struggling.
So we've received a couple around inflation outlook.
Yeah.
So your thoughts on inflation with all the increased government spending in all of the major economies financed by money printing from central banks. So what's your view on that? And then someone else asked a related question. What is the risk of inflation at levels of the 70s and 80s?
Yeah. Well, it's a very good question. So I'll touch that, on the inflation, about the fact that we might be printing money. So actually, we're printing money, yes and no. So I know there's been a lot of stuff in the press around that printing money stuff, and I would say that what the government is doing actually they are buying some. You saw my graph, on the bond market. So what the Bank of Canada and the Fed are doing is they're buying some corporate bonds and some government and provincial bonds, because all these deficits, are financed somewhere. So what government is doing, what they are doing, they are issuing some bonds, and Bank of Canada is buying these bonds and the corporate bonds as well in order to support the market. Why they are doing that is to make sure that their stimulus that they are giving on the interest rate is reflecting in the market. So if they were not buying these bonds, the cost of getting public finance, would move up. So what they are doing, so they are buying that, but they are keeping that on their balance sheet, and the objective will be to sell gradually when the situation is going to get back to normal. So it's a bit in a different situation where, if we think about the war, when Hitler was literally printing money, so that was creating, very big inflation. So the action of doing that, buying some stuff on the balance sheet, so it's not pushing the inflation itself. So we see inflation in next year, in a range of a very regular range, 1 to 3%. So we don't believe that this money printing, will generate some inflation because of that. So obviously, it will depend how long government will support, the household. So at some point, this is why I was saying, so we need to have a bit more targeted measure, to help, people that really need it. So, but this is why we don't believe that we're going to see inflation as level as where we were seeing, many decades ago. And as soon as the economy gonna ramp up, this is why I was saying that, we see interest rate maybe moving up, in 2022. This is where we should see some increase in inflation.
Okay, great. And I think that does it for time. But what I'm going to do is ask you one last question, and the answer can be short, whatever you like.
Yeah.
But looking at your presentation, it seems like farmers should be optimistic. But is that the right takeaway, or should farmers be worried? And maybe what's one thing that farmers should do in light of all this new information?
Yeah, yeah, it's good. So agriculture, I like to call that steady eddy sector. So they're not that much. So there's not that big peak where demand is growing like a crazy way. So when the economy is very in a growing mode, so agriculture it's growing but steadily growing. When there's a crisis and downturn or a recession, it's close the same thing because the demand is quite stable. So yes, we are the environment is it's quite favorable for agriculture. So as a banker, so we're in the business of lending money, so we see agriculture as a very stable sector. So we will not make the happy dance. This is not what I'm saying here, that everything's going to be fantastic, but my point is, well, we're getting close to normal situation in agriculture. So low margin but steady margin, and we're taking benefits from the stimulus of the crisis. And what agriculture should worry about, but there's big trend out there, and we saw that some artificial meal going to be in the market, in one country. Some there's big trend like that. So about the environment protection and stuff like that. So I think in the coming years, these going to be a strong trend that we agriculture will have to look at. In my mind, it's going to be even more important than the impact of the crisis. So this is what we should took on our radar.
Wonderful. Thanks so much for taking the time to wrap that up in a pretty little package for us at the end. And thanks for taking your time to present at the Agricultural Excellence Conference. Really